Welcome to TalkTickers.
Good to be here.
Today, we're diving into the first quarter 2025 earnings call for this company. We'll try and pull out the key insights you need to know.
Yeah, absolutely. And broadly speaking, it looks like a strong start to the year for them. Saw some significant growth in, well, several key areas.
Let's get straight to those headline numbers then. We saw a pretty solid 7% increase in organic revenue year over year. And drilling down a bit, their adjusted EBIT margins, they improved, reaching 14.2%.
Right. And that non-GAAP diluted EPS number, that's a really substantial rise, didn't it? Up 30%.
A big jump. And importantly, looking ahead, the company seems confident they reaffirmed their financial guidance for the full year 2025.
Yeah, holding the line there.
Okay, so beyond those immediate results, what's really driving this? And, what should we be watching moving forward? Management framed 2025 as a, quote, pivot year. What's the significance there?
Well, essentially, it sounds like they're looking to, build on the momentum they had in 2024, while also strategically investing in new areas. Things that align with their longer-term vision, which they've dubbed North Star 2030.
Okay.
And part of that pivot is also being responsive to the priorities of the current administration.
Gotcha. And this North Star 2030 strategy, what are the core pillars? Can you break that down?
Sure. It seems to rest on about 5 key growth areas. They listed space and maritime energy infrastructure, digital modernization, and cyber, highly customized critical mission software, and also manage health services.
Okay.
And they see these areas as strategically important, both for meeting customer demands, but also aligning with what the government's focusing on right now.
Makes sense. We also saw a pretty significant move on the capital allocation front. A $500 million accelerated share repurchase, an ASR, executed early in the year. Why do that?
Well, an ASR like that lets a company buy back a big chunk of its shares really quickly. It can signal that management thinks the stocks may be undervalued, and it can also help boost earnings per share. In this specific case, it actually fulfills most of their planned buybacks for the entire year already.
Interesting. So getting it done early. And they also made an acquisition, their first one in quite some time, right?
Yeah, that's right. They signed a definitive agreement to acquire a leader in what they're calling full spectrum cyber capabilities.
Okay.
And this is a key development because it directly supports that digital modernization and cyber growth pillar we just mentioned. This acquisition, it focuses on some pretty advanced stuff like vulnerability research, reverse engineering, and exploit development, mostly for the DoD and the intelligence communities.
Full spectrum cyber capabilities. What does that really mean in this context? Sounds comprehensive.
Yeah, it suggests, a whole suite of cybersecurity expertise. It goes beyond just defense to include really understanding and even exploiting system vulnerabilities.
Yeah.
That kind of capability is, well, increasingly critical for national security folks.
Right. You can see why that's important. Management also sounded pretty optimistic about opportunities around the next-gen air traffic control system and the Pentagon's Golden Dome Defense Shield project. You mentioned active collaboration. What's the potential there?
Well, these are potentially huge, very long-term government projects.
Yeah.
The fact that they're specifically highlighting active collaboration suggests they feel they've got a strong shot at landing significant roles in those initiatives, leveraging their existing tech and expertise.
Okay. Let's circle back to the numbers for just a second. Q1 revenues hit $4.25 billion. That's the 7% organic increase we mentioned. Adjusted EBITDA was $601 million. That's a robust 23% jump year over year, with those margins improving to 14.2%. What does that tell us about how they're operating?
It really indicates they're not just growing the top line, the revenue, but they're also managing costs pretty effectively. That leads to better profitability. That big jump in EBITDA, the 23%, suggests some strong operating leverage is kicking in.
Yeah. And the bottom line looked healthy, too. Non-GAAP net income at $391 million, and that non-GAAP diluted EPS figure was $2.97.
Right. These numbers really just underscore the strength of the Q1 performance. It shows that revenue growth is actually translating pretty effectively into higher earnings.
And looking at the segments, national security and digital revenues up 5%, health and civil up 8%. Commercial international had a strong quarter, up 12%, and defense systems also grew 7%. Seems like pretty broad strength, doesn't it?
It really does. That diversification is clearly an asset for them, provides multiple growth engines, reduces reliance on just one market. And yeah, that strong performance in commercial international is definitely a highlight. 12% is quite good.
Okay, turning to cash flow. They generated $58 million in operating cash flow, $36 million in free cash flow. Their DSO days sales, outstanding. How quickly they collect payments stayed steady at 62 days. They also issued $1 billion in notes to refinance some existing debt. What's the thinking behind these moves?
Well, the refinancing, that's likely aimed at improving their overall debt structure, maybe extending maturities or possibly getting lower interest rates long term.
Right.
It might impact interest expense a bit in the short term, but it can give them more financial flexibility down the road.
Yeah.
And keeping the DSO stable at 62 days, that just suggests they're managing their receivables efficiently, collecting money on time.
Okay. Now, they reaffirmed that full year 2025 guidance, revenue between $16.9 and $17.3 billion. Adjusted EBIT margin, mid to high 12% range. Non-GAAP diluted EPS between $10.35 and $10.75. And operating cash flow around $1.45 billion. But importantly, this guidance doesn't include that pending cyber acquisition. What should we take away from that reaffirmation?
Well, reaffirming guidance is generally seen as a positive sign, right?
Yeah.
It indicates management's confident they can hit their targets.
Yeah, sure.
And the fact that this guidance excludes the impact of the new acquisition, well, it suggests there could be potential upside later in the year once that deal closes and gets integrated.
Good point. Okay, bookings. Net bookings for the quarter were $2.1 billion. That brings their total backlog future contracted revenue to a pretty substantial $46.3 billion.
That's a big number.
Yeah. And they also mentioned they updated their backlog policy. Now it includes the expected value of single award IDIQs, or indefinite delivery, indefinite quantity contracts. What does that policy change tell us?
Including the expected value of those single award contracts, it just gives a more comprehensive view of their potential future business pipeline.
A strong backlog, especially a growing one, is always a key indicator for future revenue stability and, growth potential.
Right. We also heard about some ongoing discussions around a GSA, request for information, RFI. The company seemed keen to emphasize their focus on mission critical work rather than traditional consulting. Why draw that line?
Well, in the government contracting world, there's often this distinction made between, say, strategic advisory work, the consulting part, and the actual doing the implementation of critical systems.
Okay. By highlighting their focus on mission critical work, they're likely trying to position themselves as being aligned with government priorities that emphasize, tangible results and actual tech solutions, not just advice.
Got it. The health and civil segment expected to keep growing, particularly in veteran services. And they sounded pretty optimistic about their partnership with Oracle on the VA's electronic health record, the EHR modernization. What's the outlook there?
Yeah, the focus on veteran services aligns well with stated government goals, and it's a pretty significant market. And their involvement in the VA EHR project, even as a partner with Oracle, keeps them involved in a strategically important, very large-scale, though admittedly complex project.
Definitely complex. Looking at the bigger picture now, the supplemental defense bill, the FY26 skinny budget. These are seen as creating significant opportunities that align with their growth pillars, right? Things like FAA modernization, border security, missile defense. They also think they're well positioned to benefit from continuing resolutions, CRs. How does this whole budget picture play into their strategy?
Well, there's strategic alignment with these key government spending priorities, the ones reflected in those budget documents. It suggests a pretty favorable environment for them to secure future contracts in those areas.
Okay.
And having existing programs of record, that gives them a degree of stability, even if Congress only passes short-term CRs instead of full-year budgets right away.
Right, keeps the lights on. Now, that commercial and international segment, strong double-digit growth, attributed to things like a recovery in their UK business, security solutions, and the performance of their commercial energy pillar. Their reaffirmed guidance is seen as maybe prudent, allowing room for potential investments tied to the new administration's priorities, even though they said the direct impact so far has been pretty negligible.
Yeah, that's the message. They're showing strength outside just the U.S. government market, which adds resilience, another layer of growth potential.
Yeah.
And that cautious approach to guidance, holding it steady but excluding the acquisition, it suggests they're keeping flexibility. They can capitalize on future opportunities without overcommitting too early.
Makes sense. They also mentioned they haven't seen big changes in contract terms or risk profiles in recompete so far, but they do anticipate a potential shift towards more outcome-based contracting down the line.
Interesting.
And notably, management said they don't foresee a year of revenue decline in the next 3 years. That's quite a statement.
It is. Shows confidence.
Finally, the ASR used up a lot of their planned buybacks for the year, so future repurchases will depend on market conditions. They're opportunistic about their portfolio, see all segments as well positioned, but minor divestments aren't totally off the table. Key takeaways from those points.
Well, anticipating outcome-based contracting, that reflects a broader trend in government procurement, focusing more on results, not just effort. Their confidence in avoiding revenue decline, that really speaks to how strongly they feel about their market positioning and alignment with those growth pillars. The buyback approach sounds like disciplined capital allocation, and being open to minor divestments just shows they're continuously optimizing the portfolio mix.
Okay, time for our This Is Not Financial Advices segment. Just a totally speculative idea here, sparked by today's discussion.
Always fun.
Right. So given this company's big acquisition in full spectrum cyber, especially focused on DoD and intelligence, and just the general cyber threat landscape, consider this possibility. Maybe a long position in a smaller, publicly traded firm that specializes in something really niche, like advanced threat simulation or adversarial tactics specifically for government networks.
Okay.
The idea being demand for that kind of proactive defense testing is likely to increase. And this larger company, having just shown its commitment to cyber, might see such a specialized firm as a good bolt-on acquisition later to enhance their new capabilities.
I see the angle. More specialization needed.
Exactly. And conversely, maybe a short position in a more traditional IT services provider, one that maybe lacks deep cybersecurity expertise and is still heavily reliant on older legacy government IT contracts. The thinking is the trend's shifting away from that towards more sophisticated, threat-focused solutions. But again, purely hypothetical. Don't trade based on this.
An interesting scenario for sure.
Yeah.
Definitely highlights how critical those specialized cyber skills are becoming in the government contracting space. It's definitely something to watch.
Absolutely. Well, that wraps up our deep dive into this recent earnings call. We hope this analysis gave you some valuable context and understanding.
Yeah, hopefully useful.
Remember, always do your own thorough research before making any decisions. We'll be back soon with another insightful look into the world of earnings.